Any items are disallowed which are not supposed to be considered as business expenditures, that will be considered as business expenditures in P&L account. Gross total income, what you are supposed to do? You are supposed to deduct the deduction under section 80C to 80U. Even though if he is going to claim it as an expenditure in profit and loss account, then what we are supposed to do? We are supposed to add back that to the net profit. Hello everyone, I am Arun Kumar, lecturer in Department of Commerce and Management, Vidhyaashram First Grade College, the Temple of Excellence, MYSURU. Dear students, welcome to this new session on unit number 4 and session 1 about assessment of partnership firm. So in this particular session, dear students, will be learning about assessment of partnership firm. So how we are supposed to compute the business income under partnership firm, and how we are supposed to compute the total income, and also how to compute the tax liability. So before computing or before getting know about the computation of business income, total income and the tax payable under the assessment of partnership firm concept, so let us know the format for computation of business income. So what is the format for computation of business income? So to compute the business income, we are supposed to make 3 columns: particulars, amount, amount. So first we are supposed to consider the net profit as per P&L account. So in computation of business income under partnership firm, they will be giving you the P&L account, the profit and loss account. In that profit and loss account, you are supposed to find out which and all the items are relating to business and which and all the items are not relating to business. Then as per that, you are supposed to solve the problem. In P&L account, you will get to know what is the net profit of the business entity. So net profit as per P&L account, you are going to take it in the outer column. For that, add disallowed items. So any items are disallowed which are not supposed to be considered as business expenditures, that will be considered as business expenditures in P&L account. So now what we will be doing? We will be adding those kind of expenditures to the net profit. So add disallowed items. Any reserves. So any reserves are made, reserve for depreciation, reserve for bad debts, any kind of depreciations, that should be add back to the net profit. Next one, any provisions. So yes, any provisions, that also supposed to be add back to the net profit. Next one, any advance payment. So any advance payment is made by the partners or by the business entity, that should be add back to the net profit. And income tax paid. Yes, payment of income tax is an obligation, not an expenditure. It is the responsibility of the assessee to pay income tax to the government. So what the assessee is supposed to do? The assessee is supposed to pay the tax to the government, and it is his responsibility, and he is not supposed to claim it as an expenditure. So even though if he is going to claim it as an expenditure in profit and loss account, then what we are supposed to do? We are supposed to add back that to the net profit. Next one, excess depreciation. Yes, if excess depreciation is claimed by the assessee, instead of claiming 20,000, if he claimed 30,000, so here he is claiming extra 10,000 rupees, right? That 10,000 should be add back. That is called excess depreciation. Next, donations paid. Any donations paid by the business entity, that comes under deduction. It is not an expenditure, it is a deduction. Under section 80C to 80U, it comes under that. Next, payment in cash. So any payment made in cash by the business entity, that will not be considered as a business expenditure. So that also supposed to be add back to the net profit. Next, purchase of assets. Yes, on purchase of assets, the assessee can claim, the business entity can claim the depreciation, but they can't claim the whole purchase value as an expenditure. So purchase of assets should also be add back to the net profit. So total this inner column, add it, you'll get outer column. So add this value with net profit, you will get some total. Okay, you'll get some total. So from that total, less allowable expenses, and other than business income. Yes, sometimes few items are allowable, few items are considered as business expenditure, but you'll forgot to claim it under P&L account. In that case, you can deduct here. And other than business income. If any other than business income is shown in the P&L account, that should be deducted under this head. So interest on government securities, dividend received, rent received, capital gain, these all are the incomes which belongs to other heads of income, not under the business head. So these items should be deducted. So total these items which are there in the inner column, take it to the outer column, deduct this value from this particular value. So you'll get the balance. This balance is called what? Business income. The balance is called business income. So this is how we are supposed to compute the business income. So we'll call this as business income, and also for the purpose of computing the remuneration under section 40B, this is going to be the book profit. This is going to be the book profit. So we can call this as business income as well as book profit for the purpose of computing the remuneration under section 40B of the partners. So less remuneration under section 40B, less remuneration under section 40B. So actual salary. So what is actual salary? Actual salary is nothing but the salary bonus commission paid to the partners. If any salary bonus commission is paid to the partners, the total of those three items is called actual salary. So take it in the inner column. Next, 90% of first 3 lakh of book profit. So what is book profit? So here what we find it out? The business income here, the book profit. This is called book profit. So 90% of first 3 lakh of book profit and 60% on remaining book profit. See, in case if you have more than 3 lakh rupees of book profit, okay, if you have more than 3 lakh rupees of book profit, then on first 3 lakh it is 90%, on the remaining amount it is 60%. Sometimes you are going to have less than 3 lakh rupees. At that time what you are supposed to do? You are supposed to do 90% of the 3 lakh rupees, the first 3 lakh rupees. For example, you have 2,50,000. So 90% of 2,50,000 and the standard salary of 1,50,000. The standard salary of 1,50,000. In these two, whichever is high. In those two items, whichever is high. In case if the book profit is more than 3 lakh, at that point of time, 90% on first 3 lakh, 60% on remaining value. So take it to the outer column here, that is inner column, and compare the actual salary with this standard salary. So whichever is low, in these two, whichever is low. So the lowest value you are supposed to take it to the outer column. The lowest value you are supposed to take it to the outer column. So deduct this value from book profit. Deduct the remuneration under section 40B, this value from book profit. The balance you will get here. So this balance is called what? That balance is called actual business income under partnership firm. So actual business income under partnership firm you will get after deducting the remuneration from book profit. Next, so format for computation of total income. So what is the format for computation of total income? Particulars, amount. So you are supposed to take all the 5 eighths of incomes. Income from salary, income from house property, income from capital gain, income from other sources. Then total it, you will get some total. So this total is called what? Gross total income. So from gross total income, what you are supposed to do? You are supposed to deduct the deduction under section 80C to 80U. The deduction under section 80C to 80U. So deduct the deductions, balance you will get. That balance is called what? This balance is called total income. The balance is called total income. Next, we are supposed to compute the tax payable by the partnership firm. So how to compute the tax payable by the partnership firm? We are supposed to make 2 columns, particulars, amount. So tax on total income. So you are supposed to take here the total income. Whatever the total income you will get, you are supposed to take here. So tax on long-term capital gain, always it is fixed 20%, and tax on short-term capital gain, it is 15%, and tax on other income. For example, if you have the total income 2 lakh rupees, let us say you have the total income of 2 lakh rupees. In this 2 lakh rupees, 10,000 is long-term capital gain and 5,000 is short-term capital gain. So first you taxed long-term capital gain and short-term capital gain. So tax on other income, that is the remaining income. So in this 2 lakh rupees, deduct 10,000 and 5,000. From this 2 lakh rupees, deduct 10 and 5. What is the remaining amount? The remaining amount is 1,85,000. So this 1,85,000 is the remaining income. On this 1,85,000, you are supposed to impose 30% of tax. Got it? So you are supposed to impose 30% of tax. So total these 3. Okay, you will get some total. See, it is not compulsory that you have to compute the tax on long-term capital gain. Only when you have long-term capital gain in the problem, at that time you are supposed to compute. Even with short-term capital gain also. Only if you have short-term capital gain in the problem, then you are supposed to compute. If you don't have long-term and short-term capital gain in the problem, then need not to compute 20% or 15%. Directly, you are going to compute 30% on the total income. So, on this total compute, 4% education cess. You compute 4% education cess, add this 4% education cess, then whatever the balance you will get, that balance is called, the total balance is called tax payable. The total balance is called tax payable. So, this is how you are supposed to compute the tax payable by the partnership firm. So, moving on to the first problem. Rama, Lakshmana and Bharata are equal partners in a firm of which Bharata is sleeping partner. The firm's profit and loss account for the year ended 31st March 2021 is given below. So, by using this profit and loss account, we are supposed to compute the business income, that is partnership firm income. So, salary relating to business, rent relating to business, advertisement relating to business, general expenses relating to business, reserve for bad debts not relating to business, add back to net profit. Next, depreciation relating to business, fire insurance, business, salary to partners. Yes, any salary, bonus, commission paid to partners, any salary, bonus, commission paid to partners, that should be add back to the net profit. So, salary to partners, you are supposed to add back, that is not a business expenditure. Commission to partners, add back to the net profit. And interest on capital, yes, interest on capital at 12%. So, one thing you have to know carefully, that is any interest on capital paid excess of 12%. Interest on capital paid excess of 12%, the excess percentage should be added back to the net profit. For example, if he pays 15%, in 15%, 12% is exempted, remaining 3% is supposed to be added back to the net profit. So, if he's paying more than 12% of interest on capital, up to 12% is exempt, more than 12%, it is supposed to be added back to the net profit. Next, interest on capital, it is 12%, so it is fully business expenditure, need not to add back to the net profit. So, moving on to the income side. So, here gross profit business, discount business, income from house property, this is not a business income, this comes under house property. Long term capital gain, this is also not a business income, comes under capital gain. Next, interest on securities comes under other sources, not under business. So, moving on to know the other informations. The first one, depreciation was excess debited by 2000 rupees. Yes, what is the depreciation given in the problem? Here depreciation 8000 rupees. He is supposed to claim, the assessee is supposed to claim 6000 rupees. He is supposed to claim 6000 rupees, but how much he claimed? He claimed 8000. So, now what you are supposed to do? You are supposed to add back 2000 rupees to net profit. You are supposed to add back 2000 rupees to net profit. So, what is the another adjustment we have? General expenses includes 5000 rupees donation to NDF. Yes, here general expenses, totally we have 6000. In 6000, 5000 rupees is supposed to be added back to the net profit. Right, 5000 rupees is supposed to be added back to the net profit. So, let us move on to solve the problem. Computation of business income. So, net profit as per P&L account. What is the net profit in the problem? It is rupees 1,20,000. Net profit is 1,20,000. So, 1,20,000 outer column, add disallowed items. The first one, donation to NDF, which is included in general expenses. So, donation to NDF 5,000. Next, reserve for bad debts 4,800. Next, excess depreciation. He claimed 8,000 instead of 6,000. So, excess of 2,000. Next, partner's salary. Yes, it is given in the problem. If the partner's salary is given in the P&L account, that should be added back to the net profit. So, partner's salary altogether 28,000 and commission to partners, it is 12,000. So, total it, you will get 51,800. Add it with 1,20,000, you will get 1,71,800. So, from that value, less allowable items and other than business income. Less allowable items and other than business income. So income from house property is there in the problem. It is not relating to business. 18,000. Long-term capital gain 15,000. Interest on securities 7,000. So these three items are there in the problem. Here you can see income from house property, long-term capital gain and interest on securities not relating to business. We are supposed to deduct it. So here we are considering those three items. So total it, you will get 40,000. So deduct 40,000, you will get the balance of 1,41,800. You will get the balance of 1,41,800. That value is called book profit. That value is called what? Book profit. So from book profit less remuneration under section 40B. Remuneration under section 40B. So actual salary, that is salary, bonus, commission. So what is the actual salary given in the problem? Salary is 28,000 and commission is 12,000. Bonus is not there. So totally it comes to 40,000. Next, B, 90% of first 3 lakh of book profit. 90% of first 3 lakh of book profit. So what is the book profit we have? 1,41,800. The book profit what we have? 1,41,800. So 1,41,800 into 90%, you will get 1,27,620. 1,27,620. So here the book profit is not more than 3 lakh rupees. So when it is not more than 3 lakh rupees, we are supposed to compare it with standard salary of 1,50,000. So in these two, whichever is high, in these two items, whichever is high, that is 1,50,000, take it to the inner column. So compare it with the actual salary. So actual salary is 40,000 and the standard salary what we got is 1,50,000. So in these two, whichever is low. So which is the lowest salary? That is rupees 40,000. So deduct that 40,000. Deduct that 40,000. The balance what you will get? 1,01,800. That is called business income under partnership form. Next, moving computation of total income and tax payable. So income from salary is not there. Income from house property is there. Yes, it is rupees 18,000. And income from business, calculated it, that is rupees 1,01,800. Long-term capital gain is there relating to capital gain 15,000. And income from other sources, we have interest on securities of rupees 7,000. Totally you will get 1,41,800. So 1,41,800 is called gross total income less deduction under section 80C to 80U. Donation to NDF is there. So deduct 5,000 rupees of donation. You will get the balance of 1,36,800. That is called total income. That is called total income. So now compute the tax on the total income. So first you are supposed to compute tax on long-term capital gain. So 15,000 into 20%, you will get 3,000 rupees. Next, tax on remaining income. So that is 1,36,800 minus this 15,000. Balance how much you will get? 1,21,800. So on that compute 30%. How much you will get? 36,540. So total inner column you will get 39,540 to the outer column. So on this 39,540, compute education cess at 4%. You will get 1,582. 1,582. Add this add 1,582 with 39,540. You will get 41,121. So that 41,121 is called what? It is called tax payable. So under this particular problem, what is the tax payable? It is rupees 41,121. Moving on to the next problem. X, Y, Z are equal partners. The firm's profit and loss account for the year ended 31st March 2021 is given below. So trade expenses, business, salaries, business, provision, not a business expenditure, postage, business, repairs, business, depreciation, business, donation, not a business expenditure. Next, rent of building, business, salary to partners, not a business expenditure. Interest on capital, so 2% you are supposed to add back because he is paying 14%. So 12% exempt, remaining 2% add back to the net profit. Next, profit side, gross profit business, commission business, interest on securities. Interest on securities is not a business income. Dividend received, not a business income. Long-term capital gain, not a business income. So adjustments relating to this particular problem. Trade expenses include rupees 11,880 for payment of income tax. Yes, in trade expenses, you can see here trade expenses of rupees 36,000. This 36,000 rupees is inclusive of 11,880 of IT paid, that is income tax paid. So this amount should be added back to the net profit. So next adjustment, donation are given to an approved educational institution. Fine, we will be giving the deduction. Next, depreciation allowable as per the IT rule is rupees 10,000. So what is the depreciation claimed by the SSE? It is rupees 6,000. You can claim 10,000. You can claim 10,000, but how much he claimed? He claimed only 6,000. Still he can claim 4,000 rupees. So what we will do? We are going to deduct this from net profit. Next adjustment, that's it. So compute total income and tax liability of the firm. So first we are supposed to find out the business income. So net profit as per P&L account, it is 78,000. Next, add disallowed items. In that first one, income tax paid. So what is the income tax paid? 11,800. Next one, provision for bad debts, 4,600. Next, donations, 8,000. Salary to partners, 30,000. Excess interest on capital, that is 2% amount, you'll get 6,000. Total it, you'll get 60,400. Add that with 78,000, you will get 1,38,400. Next, less admissible items and other than business income. In that, interest on securities, it is rupees 8,000. Next, dividend, 12,000. Long-term capital gain, 34,000. And depreciation, 4,000. He is supposed to claim 10,000, but he claimed only 6,000. So now we are deducting the remaining 4,000 rupees. So deduct this 58,000 from 1,38,400. So balance you will get is 80,400. How much you will get? 80,400. 80,400 is called what? Book profit. So from book profit less remuneration under section 40B, actual salary rupees 30,000. It is given in the problem, partner salary. Next, 90% of first 3 lakh of book profit. So on book profit, if you compute 90%, you will get 72,360. So here the book profit is less than standard amount of 1,50,000. So compare this book profit of 90% with 1,50,000, whichever is high. So take 1,50,000 here and compare it with actual salary received, whichever is low. You will get 30,000. So deduct 30,000 rupees from book profit. You will get the balance of 50,400. You will get the balance of 50,400. That 50,400 is called what? Business income. Next, computation of total income. So for computation of total income, yes, obviously we have 5 years. Income from salary, it is nil. Income from business, 50,400. Income from house property, it is not there in the problem. Next, income from capital gain, rupees 34,000. And income from other sources, in that we have interest on securities and dividend received. So here 8,000 and 12,000, 20,000 you will get. Next, total, the outer column you will get 1,04,400. You will get 1,04,400. That is called gross total income. Next, less deduction under section C to ATU. In that we have donation to school of rupees 8,000. Deduct 8,000. You will get the balance of rupees 96,400. That balance is called what? Total income. Next, moving further, computation of tax payable. So first compute tax on long-term capital gain, 20% on 34,000. You will get 6,800. And tax on remaining income, 62,400 into 30%. You will get 18,720. Total these two you will get 25,520. On that compute 4% education cess. You will get 1,020. Total these two items, you will get 26,540. 26,540 is called what? Tax payable. Next, moving to the next problem, problem number 3. P, Q and R are partners of a firm sharing profit and loss equally. The following is the profit and loss account for the year ending 31st March 2021. So particulars amount. Salary to staff, business. Rent, business. Office expenses, business. Advertisement, business. RBD, not a business expenditure. Bad debts, business. Salary to partners, not a business expenditure. Commission, not a business expenditure. Bonus, not a business expenditure. Next, Donation to NDF, not a business expenditure. Donation to PMNF, not a business expenditure. Interest on capital, you are supposed to add back 3%. He is paying 15%, 12% is exempt, remaining 2% is taxable. Next, interest on loan, business. Municipal tax on house property, not a business. Interest on loan relating to house property, not a business expenditure. So looking into the income side. So here gross profit business, interest on security not a business, dividend not a business, rent from house property not a business, long-term capital not a business, casual income not a business income. So moving further to know the adjustments. Depreciation allowable is rupees 8,000. So is the depreciation given in the problem? Just you have to look into the P&L account whether the depreciation given is or not. So depreciation is not given in the problem. What you are supposed to do? You are supposed to deduct it from the net profit. Next, bad debts recovered. Yes, this is a business income. You are supposed to add back to the net profit. Bad debts recovered is not given in the income side. So add bad debts and deduct depreciation. So moving on to solve the problem. Computation of business income. Net profit as per P&L account. So what is the net profit as per P&L account? Rupees 44,090. So here in the problem you can see the net profit 44,090. So net profit 44,090. Add disallowed items. In that first one, reserve for bad debts 10,000, salary to partners 48,000, commission 10,000, bonus 12,000, donation to NDF 5,000, donation to PMNRF 5,000. Next, interest on capital, that is excess of 15%, you'll get 3%, that is 3,600. Next, municipal tax 3,000, interest on loan 5,000, bad debts recovered. So bad debts recovered is 15,000. So outer column, what is the total you will get? The total is 1,16,600. 1,16,600. So add this value with 44,090. You will get the total of 1,60,690. Next, less allowable items and other than business income. In that, the first thing is depreciation. You were supposed to claim it as an expenditure, but you forgot to claim. So depreciation 8,000. Interest on securities 18,600. Dividend from Indian company 10,000. Next, rent from house property 30,000. Long-term capital gain 18,000. Casual income 9,000. So total the value, you will get the total to the outer column 93,600. So deduct that 93,600 from 1,60,000, you will get the balance of 67,090 rupees. That 60,090 rupees is called what? It is called book profit. 67,090 rupees is called book profit. Next, less remuneration under section 40B. Less remuneration under section 40B. So actual salary, so 42,000, 4,000 plus 10,000, that is salary, bonus, commission. You will get 56,000. 90% of first 3 lakh of book profit. So what is the book profit we have in the problem? It is rupees 67,090. So 90% of the book profit and the standard salary. In these two items, whichever is high. So which is the higher value? 1,50,000. So in these two items, whichever is less, 56,000 is the least amount. So deduct 56,000 from book profits. You will get balance of 11,090. That 11,090 is called what? Business income. Next, computation of total income. Income from salary. Obviously, we don't have income from salary under partnership firm. Next, income from business 11,090. Income from house property is 13,900 because the rent received is given. So rent received minus municipal tax minus 30% of annual value and also deduct the interest on loan. If you calculate as per the house property rules and regulations, you will get the income from house property of rupees 13,900. Next, income from capital gain 18,000. Income from other sources, altogether you will get 37,600. Totally you will get 80,590. That 80,590 is called what? Gross total income. So from gross total income, less deduction under section 80C to 80U. So donations are made, donation to NDF and donation to PMNRF, deduct 10,000 rupees. The balance what you will get? You will get 70,590. That is called total income. Next, computation of tax payable. So particulars, amount. So tax on long-term capital gain, 18,000 into 20%, you'll get 3,600. Next, tax on remaining income. So deduct 18,000 from 70,590, you'll get balance of 52,590 into 30%. So you'll get 15,777. So total it, you'll get 19,377. So on this value, compute 4% education cess, you'll get 775. Add this 775 with 19,377. You'll get the total of 20,152. That is called tax payable. So I hope all of you understood how to compute the business income, total income and tax payable under the assessment of partnership firm. So thank you all for watching. So for more videos, keep watching. Until then, thank you all.